Welcome to today's video, where we dive into a crucial topic for 2025, the top 5 assets that will make you wealthy with smart investing strategies. In a constantly shifting economic and financial landscape, choosing the right assets to invest in doesn't just protect your hard-earned money, it also opens the door to sustainable profits and growing your wealth over time. This is especially vital for those in their middle years and beyond who are actively seeking to strengthen their financial foundation and secure a safer future. The year 2025 marks a significant turning point in the investment landscape. Monetary policy shifts, volatile stock markets, and emerging technological trends are all profoundly impacting asset values. Investing wisely, truly understanding the characteristics, advantages, and benefits of each asset class is essential not only to preserve your capital, but also to achieve sustainable financial growth. In this video, we will introduce you to the top 5 assets currently rated highest, designed to help you build wealth in a structured and effective way. For Americans aged 35 and older, investing is no longer just the domain of the young or financial experts. It has become a critical component of personal financial planning. Many of us have families, responsibilities, and the desire to ensure a stable, even comfortable financial life in retirement. That's why choosing the right investment assets will allow you to leverage the power of time and market trends to reach those goals. First, let's review the 5 leading asset types that savvy, experienced investors are prioritizing in 2025. 1. Stocks of major technology companies. Among the top investment assets in 2025, stocks of major technology companies consistently hold a crucial position and attract significant attention, especially from middle-aged investors in the U.S. These companies, Apple, Microsoft, Google, are household names renowned for their sustainable growth and continuous innovation in the tech sector. What sets these tech giant stocks apart is their remarkable growth potential and high liquidity. These companies regularly deliver outstanding revenue and profits by leveraging cutting-edge technologies, expanding global markets, and diversifying their product lines. This makes their stocks highly attractive on the stock market due to ease of trading and excellent liquidity, ideal for investors who need flexibility in managing their portfolios. The greatest advantage of investing in technology stocks lies in their substantial long-term earning potential. Companies like Apple and Microsoft not only boast strong financial stability, but also continually innovate, developing new products and services that drive steady revenue growth. Investing in this group allows you to capitalize on the explosive growth of technology, one of the most dynamic sectors in today's economy. Moreover, tech stocks tend to better withstand inflationary pressures compared to many other asset types, as their corporate values often rise alongside economic expansion and increasing demand for technology. For investors over 35, including major technology stocks as part of their portfolio is a savvy strategy. It diversifies assets while providing effective opportunities to grow wealth amid market volatility. Additionally, because these companies serve expansive consumer markets, the risk of significant stock value declines is generally lower than that of smaller firms or more traditional industries. In summary, stocks of leading technology companies like Apple, Microsoft, and Google not only feature exceptional growth and liquidity, but offer numerous advantages that help investors achieve lasting benefits. This asset choice is well suited to protect and grow personal wealth while enabling you to harness the ongoing technological trends through 2025 and beyond. Smart investing in major tech stocks will contribute significantly to your sustainable wealth and long-term financial stability. 2. Multi-sector ETF funds. In an increasingly volatile and complex financial market, finding a safe, efficient, and easy-to-manage investment vehicle is a priority for many investors, especially middle-aged Americans. One of the top choices today is the Multi-Sector ETF Fund, an investment tool that has gained widespread popularity and high regard due to its diversification and convenience. A multi-sector ETF fund tracks a broad market index, but instead of focusing on a single industry or geographic region, it diversifies investments across various sectors and countries worldwide. This means when you invest in a multi-sector ETF, you don't just own shares in companies from technology, healthcare, consumer goods, and finance. You also spread your investments across multiple nations. This diversification is a key feature that significantly reduces risk compared to putting all your capital into one or a few individual stocks. The greatest advantage of multi-sector ETFs lies in their highly effective risk dispersion. Instead of selecting individual stocks or assets yourself, investors simply purchase shares of the ETF to indirectly own a diversified basket of assets, protecting against significant losses if one sector or economy hits turbulence. Additionally, ETFs trade on stock exchanges, just like regular stocks, offering you the flexibility to adjust your portfolio whenever necessary. The management fees for ETFs are generally lower than actively managed funds, optimizing long-term returns. The benefit of investing in multi-sector ETFs is especially suited for beginners or those with limited time who still want to build a safe and sustainably growing portfolio. You don't need to spend hours researching individual stocks or monitoring the market daily, since professional managers handle the fund's composition and selection. This makes investing simpler while ensuring you benefit from the overall market's growth. For middle-aged investors balancing work, family, and other responsibilities, multi-sector ETFs provide a smart and effective investment solution. You can rest assured that your portfolio isn't overly dependent on the fluctuations of a single sector or market, reducing unexpected risks and enhancing capital preservation. Meanwhile, the steady growth potential of these ETFs contributes to increasing your asset value over time, helping you move closer to long-term financial goals like retirement preparation or supporting your children. Moreover, investing in multi-sector ETFs makes it easy to access international markets without requiring deep knowledge of individual countries or regions, thereby increasing profitability and effectively diversifying risk. This is a major strength of this investment channel in today's globalized economy. In summary, multi-sector ETFs not only feature broad sector and geographic diversification, but also offer multiple superior advantages, such as risk reduction, low costs, and high liquidity. These benefits create a flexible, safe, and efficient investment vehicle perfectly suited for middle-aged individuals aiming to build sustainable wealth through smart investing without dedicating excessive time or effort to management. Choosing multi-sector ETFs in your 2025 portfolio is a strategic move to protect and grow your assets amid an increasingly complex and volatile financial environment. 3. Rental real estate. Within a well-diversified and effective portfolio tailored for middle-aged investors in the U.S., rental real estate consistently stands out as one of the most sustainable and attractive investment options. Investing in residential or commercial properties for rental purposes not only generates a steady stream of passive income, but also contributes to long-term asset growth, meeting the dual need for financial protection and expansion in an ever-changing economy. The defining feature of rental real estate is the ownership of physical assets, whether it's a home, an apartment, or commercial buildings like offices and retail stores. These properties are leased out to generate monthly rental income, giving investors a consistent cash flow without having to engage directly in complex business operations or active management. This characteristic is especially valuable for middle-aged individuals who prioritize stability and security in their investment choices. A key advantage of rental real estate is its ability to produce reliable cash flow through rent. This income can cover maintenance costs and still deliver real profits. Moreover, property values tend to appreciate over time, particularly in rapidly developing or urbanized areas, allowing your investment not only to retain its value, but also to grow substantially over the years. In this way, rental real estate becomes a dual-purpose asset. It generates passive income while safeguarding and building your long-term wealth. The benefits of owning rental properties also lie in the passive income they provide. You receive monthly rent payments without having to spend significant time or energy managing the asset. This is especially important for those in their middle years whose schedules are often consumed by work and family responsibilities. Passive income from real estate offers financial stability for everyday expenses and the opportunity to reinvest or save for retirement. Additionally, rental real estate enhances portfolio diversification and reduces overall risk compared to relying solely on financial assets like stocks or bonds. Because of its tangible nature, real estate is less vulnerable to short-term fluctuations in the financial markets, giving you greater peace of mind about the value of your holdings. In times of high inflation, rental real estate also serves as a reliable hedge, as both rental income and property values tend to rise alongside inflation. For middle-aged investors, building a passive income stream through rental real estate is a strategic move toward long-term financial security. Beyond increasing your day-to-day financial freedom, rental estate is a legacy asset, something you can pass down to the next generation, contributing to the creation of enduring family wealth. That said, investing in rental real estate does require careful preparation, financially and intellectually. From selecting the right location and understanding the local market to managing the property and mitigating risks such as vacancies or maintenance costs, there are important factors to consider. However, with the guidance of professional advisors and property management services, you can take full advantage of this investment channel without facing overwhelming challenges. In conclusion, rental real estate is a standout investment asset, offering both stable rental income and long-term appreciation. It's an ideal choice for middle-aged individuals looking to build passive income, protect capital, and grow wealth in a sustainable way amid an increasingly complex investment landscape. A smart real estate investment in 2025 will not only help you maintain financial stability, but also move you closer to true financial freedom and a secure future. 4. U.S. government bonds. In an increasingly volatile and unpredictable financial market, the search for safe and stable investment channels has become a top priority for many investors, especially middle-aged Americans who are focused on preserving and growing their wealth over the long term. One of the most traditional and highly regarded options for safety is U.S. government bonds. U.S. government bonds are debt instruments issued by the federal government to raise funds for public expenditures. The defining feature of these bonds is their exceptional level of safety, backed by the full faith and credit of the United States government, one of the world's largest and most stable economies. This makes U.S. government bonds a low-risk investment option, ideal for those who prioritize capital preservation. One major advantage of investing in U.S. government bonds is the predictable stream of fixed income generated through periodic interest payments. This provides a consistent and foreseeable cash flow, which is especially valuable during times of stock market volatility or economic downturns, when riskier assets may sharply decline in value. In such times, U.S. government bonds serve as a financial cushion, helping investors minimize potential losses. The greatest benefit of U.S. government bonds lies in their ability to balance your investment portfolio and reduce overall risk. For middle-aged individuals working toward long-term financial goals, incorporating government bonds into a portfolio helps shield wealth from the dramatic swings of the stock market, offering a greater sense of security throughout the investment journey. When equities become unstable, U.S. government bonds often hold their value or even appreciate slightly, allowing investors to maintain a safe portion of their wealth. Furthermore, investing in U.S. government bonds offers considerable flexibility. You can choose from a variety of bond maturities ranging from short-term to long-term, depending on your financial goals and risk tolerance. For instance, short-term bonds can preserve capital and maintain liquidity, while long-term bonds may provide higher yields, supporting wealth accumulation over time. For middle-aged investors whose financial objectives often center around capital preservation, steady income, and retirement preparation, U.S. government bonds are an essential component of a diversified investment strategy. They not only help reduce exposure to high-risk assets like stocks or real estate, but also provide a more secure and stable financial foundation. In summary, with their outstanding safety, ability to generate fixed income, and role in portfolio diversification, U.S. government bonds are an optimal choice for middle-aged investors seeking to protect and grow their wealth sustainably. In the turbulent financial landscape of 2025, adding U.S. government bonds to your portfolio will help you maintain stability, minimize risk, and move toward a safer, more certain financial future. Smart investment in U.S. government bonds not only protects your capital, but also offers reliable income, giving you the peace of mind to enjoy life and build the retirement you envision. 5. Gold and precious metals. In a well-diversified and secure investment portfolio, gold and other precious metals have always held a vital position as traditional safe havens, especially during times of economic uncertainty or high inflation. For middle-aged investors in the U.S., gold represents more than just a symbol of wealth. It serves as a powerful tool for asset protection, helping preserve financial value over the long term. A defining feature of gold and precious metals is their long-standing reputation and tradition. Gold has long been recognized as a tangible asset of intrinsic value, independent of currency fluctuations or financial market instability. In times of economic crisis, when trust in other financial assets begins to crumble, gold consistently emerges as a trusted store of value. Alongside gold, metals like silver and platinum are also considered strategic additions, enhancing diversification and boosting the safety of an investment portfolio. One key advantage of gold is its high liquidity. You can easily buy or sell gold in global markets at almost any time, with relatively low transaction costs. Moreover, gold prices often rise when financial markets are volatile or inflation is surging. This makes gold an effective hedge against currency devaluation, protecting your assets from erosion in times of economic hardship. The most evident benefit of investing in gold and precious metals is their ability to preserve wealth and maintain or even grow value within a portfolio. This is especially important for middle-aged individuals whose financial goals focus on stability and retirement readiness. Owning gold helps offset the risks associated with more volatile investments like stocks or real estate. Gold not only holds its value, but also provides peace of mind, shielding you from unpredictable market swings. Additionally, investing in gold contributes to portfolio diversification, reducing risk when financial markets become unstable. Allocating a portion of your assets to gold helps smooth out volatility and increases the overall resilience of your portfolio. This is a crucial strategy for middle-aged investors aiming to maintain financial stability and remain prepared for sudden global economic changes. Gold investments also come in various forms, from physical gold like coins and bullion to financial products such as gold ETFs or futures contracts. This flexibility allows you to choose an investment method that aligns with your personal goals and financial capacity. For those with busy schedules or who prefer not to hold physical gold, financial products offer a convenient and efficient alternative. In short, gold and precious metals are traditional, safe, and effective assets for protecting wealth amid the constant fluctuations of the global economy and financial markets. With their high liquidity and long-term value retention, investing in gold helps safeguard your capital from devaluation while enhancing portfolio diversity and minimizing risk. Especially for middle-aged investors in the U.S., gold is a strategic choice for building a strong financial foundation and ensuring long-term security and growth. Considering gold investments in 2025 will strengthen your ability to mitigate risk and preserve wealth in an increasingly complex and challenging investment landscape. In 2025, build sustainable wealth with tech stocks, ETFs, rental real estate, U.S. government bonds, and gold. Thoughtful, long-term investing and diversification are crucial for managing risk and seizing growth. Explore these options, tailor your strategy, and consider seeking expert advice to achieve your financial goals. If this video was helpful, please like, share, and subscribe for more quality content on investing and personal finance. Thanks for joining us.